Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series with leading investors, creators, and thinkers. And our goal on these talks is the same as our goal at our SALT conferences, which is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And we're very excited today to bring you the latest episode of the SALT Crypto Show, a series of conversations that we're having focused on cryptocurrencies, Web3, NFTs, and a whole host of subjects within the digital asset ecosystem. And our guest today is Dan Gunsberg. Dan Gunsberg is the co-founder and chief executive officer of Hxro. He's also the co-founder of Hxro Network, which is a decentralized derivatives protocol built on top of the Solana blockchain. And he also serves as the director of the Hxro Foundation. He has more than 27 years of financial market experience, both as a trader and in trading operations. Prior to Hxro, Dan served as the chief operating officer of DV Trading, which is a derivatives-focused principal trading firm. He's been an active trader, investor, and founder and advocate within the digital asset space since 2015 as well. Dan, welcome to the show. It's great to have you here. The way we like to start these episodes off is to talk a little bit more about your background, and specifically within the SALT Crypto Show and people that have sort of a traditional finance background like yourself. Tell us how you got into finance and then how you made sort of the pivot from the traditional finance world and had that eureka moment as it relates to crypto, and then how you got into building Hxro.
Sure. First of all, thanks for having me. Great to be here with SALT, and excited to be a part of upcoming Crypto Bahamas. My background has largely, in terms of traditional finance, has largely been in the proprietary derivatives trading world, within the fabric of the Chicago trading world. I started on the floor of the Chicago Board of Trade in 1994, actually as a clerk, a market reporter, which is like a certain job within the trading pit, and then kind of worked my way up from a clerk to a trade checker to eventually, when I finished school, I started trading and kind of never looked back. In 2015, I was chief operating officer, principal at DV Trading, as you had mentioned, and I actually discovered Bitcoin while I was there. I had somebody that one of my colleagues had been fairly active with Bitcoin since maybe 2012, 2013. And I had heard about it really a couple years prior. Sometime around that time, I talked about it with him and then didn't really do anything. And then in late 2015, actually, happened to take a look at it one day, and market was coming out of what was one of many pretty volatile and extensive bear markets for crypto, for Bitcoin for that matter. And somewhere around September 2015, started buying it, and kind of sent me down the wormhole from there. And in 2017, I ended up leaving DV to pursue crypto full time in late 2017, and then 2018, while I was trading it along with my co-founder, who also came from the derivatives world as an options market maker, we conceptualized this very early form of Hxro, which was really a platform that's focused on more exotic type of options and kind of more creative ways for to engage the market. And in mid 2020, we did a deal with FTX, who had been, Sam Fried had been an early investor, and Alameda had been involved with Hxro prior to that. And we did we saw them launch, a couple of their engineers launch Project Serum, which was, kind of a huge breakthrough for derivatives trading, for spot trading, and that they actually proved you could put an order book on chain and have it be functional. And that was all built on Solana. And when we started Hxro, we always wanted to get to building a decentralized derivatives primitive. And once they proved it could be done on Solana, we started going down the path, and here we are today.
So before we get deeper into Hxro, I want to talk about that adoption of Bitcoin that you talked about. When you were at DV Trading, you were probably earlier than most people that came from the traditional finance world in terms of buying Bitcoin and buying into the thesis around it. What was it that drew you to Bitcoin? Is it this narrative around store of value, digital gold? Was it the fact that it was this new and novel use of cryptography within money and financial markets? But what was the reason why you really became enthusiastic about Bitcoin and crypto?
It's a great question, and it's kind of multi-pronged. First of all, around that time, we had Brexit and things like that, and we were already well into kind of what we had coined as QE forever, and the whole idea of excessive money printing, having kind of a new store of value, a digital store of value, that argument made a lot of sense to me, and so kind of from like a more macro thesis that really was one big reason. And then I think from a trading perspective, I had happened to start looking at it again in 2015, and maybe a little fortuitous on timing in that it had gone through something like close to a 90% peak to valley bear market. And so Bitcoin was around $200 at the time. So from a trading perspective, kind of between that and just what I was seeing from a more macro perspective, there was a lot of asymmetric upside if this was going to be right. And I felt like I was getting very cheap optionality to own it. And so started buying it for that reason. And then those were kind of really the first two elements. And then kind of as things moved on and as I started to get more involved on the trading side of it, it had a lot of, it felt very much like the early innings of the NASDAQ boom bust. And I was fortunate enough to trade, kind of from like 98, 99 into the early 2000s, kind of caught the middle to late innings of the NASDAQ boom bust and kind of the advent of everything, kind of Web 1 into Web 2. So it felt very similar to me. And I thought there was a lot of opportunity there. And that's kind of really what put me in it. So those three elements are really the reason. Right.
You talked about how, you had an interest in building a decentralized exchange, but obviously it's a very challenging project from a developmental perspective. And you saw Project Serum was able to put an order book on chain. And so you guys sought to build a derivatives platform on chain. What were the big challenges? We like to make this a show that's accessible both for people that are very deep into crypto, but also people that are still learning a little bit more of the basics around how you build something like a decentralized exchange. So as you set out to build Hxro and build a on-chain order book, what were the challenges there and how have you been able to address them?
Well, building decentralized derivatives primitive is definitely challenging because first of all, like derivatives, it's a very generalized word. It can mean a lot of things. And so when we first approached it, we actually were approaching it kind of trying to take a look and see where the white spaces were in the DeFi derivatives space, which obviously is still incredibly early. And we initially approached it from the perspective of looking at like European cash settled vanilla options. And what we quickly realized was that there was a lot of elements that in order to really onboard professional trading desks, you had to think through so many elements that most engineers who didn't have the same domain expertise as us would think about. And that could be things such as like market maker protections. Like you're building liquidity up, one element that you need to create trust between the technology and the participants. And so things like market maker protections or things like how you think about margining and, so like having to build a risk engine that could do, portfolio level margining and doing it in, at 400 milliseconds, it actually reviews the scans a portfolio every 400 milliseconds is pretty tricky. So things like that ultimately could lower the barrier of entry and for professional trading firms and kind of eventually create a little more trust. And our feeling was that we really needed to bring in large professional liquidity, because you kind of take a look at what the overall market of DeFi derivatives currently is today relative to what the entirety of the traditional world is. You're talking about on the order of the traditional world currently being maybe 150 to 200 times larger. And so really to attract even a small portion of that liquidity is going to take thinking through a lot of these elements, and then building it on Solana and building really a raw primitive where we're not building on top of anything else came with a lot of challenges. And so what we did is when we started building this, we quickly went to some of the professional trading firms that we've been involved with: Jump Trading, Alameda, Chicago Trading Company, Susquehanna, who are all invested into the protocol, and started working through design and actually leveraging engineering resources and resources from like the risk departments and things like that to really think through these elements and then figure out how this could transfer on chain. And what we came out with was a protocol that we call Dexterity, which is really a generalized. If you think about what a derivative is it's really just like an accounting and payoff function of an asset. And so we built this very flexible and what we call easily composable derivative primitive that you can attach any type of risk engine to it, a customized risk engine, a fee model, and market data. And out of that, actually have a derivative. So that allowed us to quickly build out the ability to support term structured futures, expiring futures, perpetual swaps, which are very kind of unique to the digital asset space market that's become very popular, European cash settled options, exotic options of all different sorts. And what that allows us to do is kind of now rethink what can be traded as a derivative. And our idea is that over time, and as kind of regulation and as kind of the fabric of derivatives of the derivatives landscape gets more comfortable with these concepts and operating on chain, that we can then expand the definition of what can actually be traded, and really kind of grow the derivative space in our own corner, kind of have our own corner of the fabric of the derivative space, and expand from there.
So you talked about regulation and market structure and things like that. So the CFTC is currently reviewing an application from FTX US Derivatives, which was formerly LedgerX, to allow for perpetual swaps, perpetual futures trading for crypto that would be regulated under the CFTC and licenses that LedgerX had previously acquired. In terms of how market structure, how you expect it to evolve as blockchain technology, people in Washington become more educated around what blockchain technology allows you to do and how it can potentially remake markets. What, if you look at the big picture, do you expect to change around market structure and what we're allowed to do fully regulated in the United States, as it relates to derivatives?
Well, I obviously strongly support FTX's efforts, FTX US derivatives efforts in kind of establishing this direct to market type of infrastructure, which I think is a massive breakthrough. For us, it's not too much, for Hxro Network, it's not too much different, except you have to kind of think of the network component or the smart contracts and the primitives that exist as really kind of a tectonic plate that sits underneath all of this, all of the trading that goes on. It's really kind of the settlement, clearing, and trading and like matching engine function all kind of plunged together. And so if you think about it in that context, I think that there are elements of existing regulation that would transfer over as it pertains to the United States. This is going to be launched non-US, so outside of the US, obviously. And I think the long-term goal, and kind of definitely a mission of mine as a contributor to the network, is really to establish a way to actually have this DAO, what will become progressively this DAO-based infrastructure that can be owned by its community of participants, and work in a decentralized open source way, and that this software really kind of sits underneath, and then on top you effectively have these nodes that can act as like the DCO or as the DCM for that matter. And it's really just software that's sitting underneath all of that infrastructure. It's not to say that things may drastically change. It's just a different way of looking at what defines infrastructure and software, but still having like kind of singular node components that can sit on top of it or kind of at the side of it that could act in that DCO function for the settlement and clearing aspects, and then a DCM for the actual trading element of it.
Yeah, no, Brett Harrison at FTX US has given a lot of great talks recently about disrupting traditional market structure. Yeah. Like you said, I think it is a massive breakthrough. So excited to see you guys succeed and continue to see FTX US's efforts in sort of upending traditional market structure in a way that's much more consumer friendly.
Yeah, I mean, they're definitely paving a new path for everybody, which I think is incredibly exciting. And again, we're super supportive. I kind of look at what Hxro Network is building as maybe even the next generation beyond what FTX is doing, and hopefully can get pushed through here soon with the CFTC.
Right. So you talked about how you made a decision, somewhat based on your observations of Project Serum and the success they had building an on-chain exchange. You built on the Solana blockchain. So I'm sure during this process, you looked around at different blockchains, evaluated which one was the best fit for what you guys were trying to build. How did you guys decide to use Solana? What made it stand out as the optimal chain to build Hxro on?
Sure. I'd be lying if I said it didn't have some effect that, Alameda / FTX / every Sam, the whole team behind it, didn't have some positive effect on us driving that decision. Obviously, a lot of trust in their abilities around understand the technology they're working with, and again, being the first mover that they are on pretty much everything, it paved a really clear path for us. But throughput capabilities of Solana, the cost structure of transacting on chain on Solana, those two elements alone made it without a doubt the front runner and for us to be building on. At the time we started building on it, it is not easy to build on Solana. They call it, if your engineers generally call it glass chewing, or there's kind of a saying in the Solana ecosystem of you're chewing glass as you're building. So, but when you do get through it, it is the most highly performant and a blockchain available in crypto today. And I think between that and then kind of the started to see more and more of the firms that were rallying around it, which ended up largely being firms that were really steeped in professional derivatives trading. It started to make more and more sense. So I think between that and its potential use cases in the financial system, we really kind of do think that Solana will end up being the L1 that most of the decentralized trading infrastructure that exists, and actually the kind of the payment infrastructure, payment rails that exist, which all interact into capital markets and finance, the L1 will end up being Solana. When we started, it really was, you really had a choice between Bitcoin and Ethereum. And obviously Bitcoin was not doable. And then Ethereum just didn't have the throughput capabilities. And also the fear of, as Ethereum got more expensive, what gas costs would look like. And we luckily were right on that front. So obviously with L2s and stuff, that's evolved. But right now, our focus is in on Solana. We've had an amazing experience with the Solana ecosystem and with Solana engineers who have played a big role in helping bringing Hxro Network to life. And we still think it's the front runner by a long shot. So.
Right. So Hxro has, you've been able to recruit top tier talent from the traditional finance world, including yourself as a founder. You have members of your team that come from Goldman Sachs, from CME, from SIBO, from Macquarie, among other ABN AMRO, from among other high profile companies within the traditional finance world. I want to ask a couple questions about that, but the first one is, for someone like yourself and people from companies that I just referenced, why do you think there's been such a brain drain taking place from the traditional finance world into crypto? And do you expect that to continue?
Absolutely. I mean, I think, part of our mission is really to kind of or part of the mission of Hxro Network is really to stand at that intersection of traditional finance and DeFi. And I think that these last couple of years, I actually think it started really like maybe 7-8 years ago. But it's really kind of gone more exponential in the last year. And more than anything, at least from my perspective, and maybe this is really being kind of in the Chicago derivatives world, is there was such a move to trading crypto digital assets because there was so much opportunity there. And professional trading firms who really embark on trading arbitrage and things like that, there's so much opportunity that was there. And I think that was kind of the chicken that has come before the egg. And as that started to build, and as those numbers started to build, and then just the overall market cap of crypto growing as exponentially as it has, obviously there's, to the financial world, that's going to be impactful. And then I think some of the political and geopolitical, economic elements that really for slower moving entities that are kind of forced to move slower, like bigger institutions, I think you're now just seeing them come to the table, and maybe they have already been here quietly through like secondary or tertiary routes, but now we're starting to see those entities really dive in. And I do think it's going to continue. I don't think it's this like 0-1 kind of, we're going to shut the lights out in traditional finance and then turn on, this new digital asset world. It's going to be this evolutionary process. And as like younger engineers and executives from traditional finance who have already immersed themselves in crypto or in digital assets start to move up into more decision-making roles. I think as technology starts to kind of obfuscate away from plumbing and become more user-facing friendly, which then becomes more meaningful to institutions like banks, and then as regulators can get closer and closer to kind of having more prescriptive guidance around how to function within the context of the digital asset space, and we get better with things like FATF, and which I think is already so far down the line. I think people kind of they only see the headlines, they don't see really what's there. But we have made so much progress on that front, and the companies or the projects in crypto that are thinking about the future do think very heavily about things like KYC, AML, and other things that now are getting to the point where you have the better tools and people are starting to understand the value proposition of digital assets, and that they're not fully, anonymous. They're kind of like pseudo-anonymous, and having this whole concept, which is something that Hxro Network is approaching, of like permission DeFi. It really is kind of opening the floodgates for this more traditional crossover and giving them a way to start putting their toe in the water.
Yeah, you answered a lot of what my next question was going to be, which we've seen Goldman Sachs. They did their first OTC trade with Galaxy. You have hedge funds like Citadel, among the largest and top performing hedge funds in the world, now actively trading crypto. And, in general, you're seeing the crypto market mature, whether it be spot markets, whether it be derivatives markets. And I think it takes some of the risk off the table within crypto as it relates to thin markets and lack of liquidity, and bring some of the elements of traditional financial markets that allow them to function, very healthily. How much do you see, continued maturation of crypto markets to the point that some of the inherent risks of a brand new asset class are going to be diminished, over time?
I mean, I think it's starting to pick up the pace at which that's going to happen, and I think as involvement from these larger players, like you said, and then building technologies like what Hxro Network is building, and thinking through like that you can have this decentralized network where the network participants can work collectively for the common good of everybody to have the type of infrastructure that they want that may solve some of the issues or friction points that currently maybe exist in the traditional space. And then having things like having some of these players in and having some of these additional mechanisms that allow them to inject more liquidity, more where they feel they can do this on a more trust, or in many senses on a trustless basis, where they don't have to worry about trust, but allowing them to start allocating more capital towards the space, more resources towards supporting liquidity and general infrastructure, and introducing that into kind of their everyday business. I think the genie's out of the bottle. It's not something that's going to roll back necessarily. Like this is the automobile has kind of replaced the horse and buggy at this point, and now it's about evolving the automobile. Very early stage, but about evolving the automobile. And I do think one point I'm sorry, yeah. John. One point I'll make. One more point I'll make of that. I think that and I had talked about this with Jeremy Schwartz from Wisdom Tree last week on another podcast. But one thing that I think through a lot is everybody's getting a front row seat to this too. It's just because of the internet. Like when we had like the early days of the internet, like nobody knew. If you went across 1 billion people all over the world and said, tell me about ARPANET, tell me about TCP/IP, like 99.999% of the people are going to stare at you blankly and not have an idea, right? You're seeing, the world is getting to see this in real time, like through a window, and they actually get to live it because of the decentralized nature of it and because of the advent of the internet and the access to information that exists now. So you're getting to see the early phases, the kind of crypto Pangea, like everything getting seasoned and hardening. And with that comes these like hacks or these things that break all the time. And it just kind of is the way that technology evolves. And so I think the fact that we're seeing this like upfront, it's probably a little scarier to people in many ways, but over time, as it hardens, and then as you obfuscate those smart contract or plumbing layers or primitive layers away from the everyday public, and you can start focusing on real usable user applications and things like that, then you're going to start seeing a real exponential growth. But I think like some of the larger traditional finance institutions know that's coming. So this is kind of like the last stand for them to get in front of it. It's evolved to the point where they are getting more and more comfortable, or their boards are getting more comfortable to kind of start stepping in. And I think FTX Salt in the Bahamas is going to kind of be a major inflection point where everybody gets to come together and now start thinking about these things. And I think from there, hopefully it's just kind of the new chapter and a launching point to really move forward.
Well, I appreciate you promoting our event that we're launching with FTX, and super excited to have the Hxro Network there and to have you speaking. But I do think you're right that, just in planning that event. So the SALT conference traditionally, in its early days was a hedge fund focused conference. Over the last several years, it's continued to evolve to include more fintech players, to include people working in the digital asset space. We had our first digital asset speakers in 2014 when the Winklevoss twins came to our conference in Las Vegas and spoke about Bitcoin, and all of the hedge fund managers in the crowd were sort of snickering at the idea that Bitcoin was the Winklevosses' next big entrepreneurial venture and the things they were building on top of it. But now, when we launched the conference, we expected it to have some mix of traditional finance and crypto native. But the interest that we've seen from the CEO of Citadel will be there. Players from Brevin Howard, from Point72, from Third Point, the leading hedge funds in the industry and leading banks, Bank of America, Goldman Sachs, all these people will be there and have reached out to us proactively about how do we participate here and how do we get deeper into the crypto world. And we, like you, see ourselves at Skybridge and at Salt as a little bit of a conduit between those two worlds. And just the amount of enthusiasm and interest that we're seeing from the old world into the new has been eye-opening during the planning process for that conference.
Sure.
Which is a good segue into sort of my last question, which is a macro question. It's sort of, if you look 5 to 10 years into the future and you think about crypto and how it's permeated different aspects of our society, our financial markets, our financial system, how do you see crypto playing a role? Do you think it'll become, commonplace within the payment space? It's going to replace some of the credit card type railings that we have in the United States and around the world? From a financial markets perspective, do you think we'll see more decentralized applications as it relates to whether it's spot or derivatives? But paint a picture for us of the world, let's say 10 years into the future, about how crypto has eaten different aspects of our society and financial system.
Absolutely. So kind of at the primitive base layer, I think that you end up with these large networks that almost act as like in the same way that like kind of single point of failure corporations have existed historically. And these exist in these DAO structured, decentralized networks where pretty much anybody, pending on the, what purpose the network is serving, in some cases, obviously it'll be required to be permissioned. But let's say that's the case, then anybody can come, get permissioned, and then participate in the network and be rewarded for their efforts. It's kind of the gamification of the corporate world in many ways. And you'll have these large networks that are supporting the base layer infrastructure. Again, like to kind of make an analogy, they're kind of like the tectonic plates that sit under the various continents across the world. And the continents are the user-facing applications that are using the services and the plumbing that exists at these networks, and those will have different types of mechanics attached to them. But I do see this very interesting world coming of this merging of the metaverse with physical universe. I think we're already kind of seeing it. If you have a 10-year-old or 12-year-old kid, they pretty much are already if they're in their phone, they are already living in the metaverse. And if you try to get their attention, generally they're, you probably have to ask them 3 times before they snap out of it.
My oldest is 5, so I have yet to fully cross that bridge, but, much to my chagrin, she is already, loves playing around on Snapchat with the filters and messing around in different sort of metaverse centric applications to the point where I know it's on the horizon for me. And I know it's probably inevitable, but I'm also trying to slow that process as much as I can.
Yeah, you asked for a look in the future, and I think I gave you one, probably one step closer to home. So, but I think you have that, and then I think you have these applications that sit on top, and those are how the rest of the world is evolving. Like I think in 7 to 10 years from now, nobody's going to really be talking about the plumbing anymore,
right?
And it's going to be all about the consumer-facing aspects of things, and I think the B2B to C kind of infrastructure is what will kind of permeate. And you'll have this sense of community-driven kind of ownership, so to speak, of networks. I do think you're going to have this kind of interesting change away from typical equity cap structures and things like that. And it will be a more of a digital kind of asset-driven DAO-based infrastructures. And you're starting to see some of these things evolve. And we went from the technology element to now some of the theories around how DAOs work. And there's some very developed DAOs now that are getting into these interesting kind of political things that exist. And I think all that needs to get flushed out over the next 7 to 10 years. And I think, things like how those types of networks can exist within a regulatory construct need to be flushed out over the next few years as well. It's something that, I'm looking forward to being very proactive about. I think what's going to end up happening is with this pertains to digital assets is you're going to have kind of these two worlds. You're going to have this kind of lit permissioned world where will look and feel very much like how the traditional world looks today, with a lot less friction,
right,
and a lot more transparency, and a lot more decision-making power being put ultimately back to the participants in it, in terms of like users. And then you're going to kind of have this other part of crypto that might be more driven around privacy and things like that, I think will, how that plays a role in the long run. It's not the space that I'm in. So, but I think there's always going to be that element of crypto there. And I think eventually those two worlds are going to kind of sever and live separately. And that's kind of what I'm hoping will happen. And I think that'll from a regulatory aspect, make things, advance a lot faster. I think that's going to kind of be it. You're going to end up with the world's going to be using crypto, and they're not even going to even know it. I think that's how we end up in the next 10 years.
Well, Dan, it's been a pleasure to have you on Salt Talks and the Salt Crypto Show. Looking forward to seeing how the Hxro Network is involved in shaping that future. I know you're working with a lot of fantastic partners. You have a lot of great investors who we're friends with as well, that believe in what you guys are doing. So excited to watch you guys on that journey.
Thanks, John. Been a pleasure.
Thanks again for joining, Dan. And thank you, everybody, for tuning in to today's Salt Talk with Dan Gunsberg of the Hxro Network. We're excited to host Dan as a speaker at Crypto Bahamas, the conference that he referenced earlier, which is in late April down in Nassau, Bahamas at the Baha Mar Resort. That event is now sold out, I can say exclusively here on Salt Talks. So excited to have a great group of people down there in year one and continue to grow that event as FTX has recently relocated its headquarters down to the Bahamas. But just a reminder, if you missed any part of this talk or any of our previous talks, you can access them all on our website at salt.org/talks or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active, but we're also on LinkedIn, Instagram, and Facebook. And please spread the word about these Salt Talks. Again, we love educating our sort of traditional finance community around the innovation that's taking place in the decentralized finance and blockchain ecosystem. So please spread the word. And on behalf of the entire Salt team, this is John Darcy signing off from Salt Talks for today. We hope to see you back here again soon.